What's going on, family? Hopefully you're doing absolutely wonderful. Welcome into our Stock Sermon Sunday. If you're here, let me know down below. Look at the chat here. Hopefully everyone's doing wonderful. Doing wonderful. Checking in. Make sure all the audio, all the good things. We're back in the office setup, as you can see. So hopefully you have you appreciate that today, because a lot of you were here when we having a little bit of technical difficulties traveling on the road for the holiday season. So I'm gonna check in with everybody. Hopefully we're doing well, and we'll go from there. We will go from there. Doing a final check here. Alrighty. One final check. Let me know where you're tuning in down from below. I'd appreciate you. Let me know who's here tuning in. We're getting this together. I'm going to pause that for a second. All right, we are live and back. What's going on, Trent? What's going on, Marlon? What's going on, Sharice, I believe? Hopefully you are doing well. I appreciate y'all sticking with me. And we will jump right into it. I'll give maybe 3 minutes here at the top of the hour. I always like to give like a 5 or 10 minute buffer. But how's everybody been? What is going on here? All right. We're going to do that today. A little bit difficult today. Get all the necessary checks. I jinxed myself. Woo! My goodness. My goodness, my goodness, my goodness. All right. Hopefully, I'm not blasting you guys' eardrums and ladies out, but welcome to our Stock Sermon Sunday. And we are, guys, he's having a little issue. Stand fast. I appreciate you. I appreciate you. We good? We good? We good? We good? Awesome. Trust me. Trust me. Trust me. I do multiple checks before I jump on. It's like, man, this dude can't get it together every time I join in. Trust me, I do multiple checks. But anyways, that's not here nor there. Let's jump into the value today. Welcome, everybody. I appreciate you for being here. Let me know where you're tuning in down below. I already see some people chiming in. Trent, I appreciate you. Marlon, others that are hanging out with me as people come back and check back in. If you're rewatching, hopefully you skip to this part. And we got a lot to talk about today. Got a lot to talk about because it's first a new month, right? We've also got a whole new year. And we've got, starting off this year, a lot of news driven that potentially could shock the market this week. Number one, to give you kind of a rundown really quickly. Number one, we've got this Venezuela, China, and obviously U.S. situation going on. We've got oil that could be affected. A lot of people have questions like, hey, how can I take advantage of this in some form or fashion? And how I like to approach trade war news, anything that is going to affect the overall markets in some form or fashion. I like to trade or invest how I normally do, but I might put some extra tickers or companies on my watch list, but I do not want to go against what I normally trade, right? Because you can get a little bit distracted and say, hey, man, let me move over here and let me do this, right? So I'll talk about a little bit how you can take advantage of that, but also stick with your specific trade plan, investment plan, and let, as we call it, the dust settle, right? Let the dust settle. Let's trade and invest how we normally do using supply and resistance levels and support/demand levels, using the charts to tell us where the price action is going to go. We react as investors and traders, or short-term investors, if I'm shouting out my boy James, right? We're reacting. We're not trying to guesstimate and estimate, okay? So let me know where you're tuning in down below. Give me a 1, 5s, whatever in the chat. Just let me know y'all are good to go, and we are loud and clear now. I appreciate you sticking with me, and without further ado, let's jump into the value. All right. All righty. There we go. All right. Perfect. So we have got economic data, as we always do. We'll chime into that and see what that's looking like this week. And really just the employment data, okay? So the first thing on Monday morning, we've got 10 a.m. data. Anytime I say we have 10 a.m. data is typically data we want to pay attention to and we want to react to. So we could have some volatility or some movement, obviously, from the overnight session tonight in the futures market. But ultimately, that 10 a.m. data could react the market just slightly with its ISM manufacturing data. Auto sales, nothing there really. Tuesday, PMI, close to 10 a.m. data time. That PMI could move the market, but really we're looking at Wednesday and Thursday and Friday. Okay, those last 3 days are all employment data reports. So we got ADP, factory orders, we've got some initial jobs claims, and then we've got our employment report right there. Okay, so all this jobs data is really going to be indicative of what the Fed is going to look for in their next Fed meeting to say, hey, how was the employment data doing from our previous report? Okay, so that is going to be very volatile starting off probably Tuesday going into Wednesday. More so, as per usual, we check out Mondays as being kind of a feeler, right? How do we react with this Venezuela, China, US news? And then we look at the rest of the week as we normally do, okay? And then we get our markings, our charts ready to go for Monday, really, in my opinion. We can get really true levels of what direction the market actually wants to go, all right? Cool. Evening. Awesome. All right, so we're good there. Let's look at I'll get it up here for you. We're going to look at the earnings reports, okay? Earnings reports. We're starting to get into earnings season, okay? Starting to get into earnings season in the next couple of weeks. And we don't have any big earnings that are on the docket coming up just yet this week. But the following week, we're going to start getting into our financial earnings. So we want to be prepared for that as well. And I'll talk about that on our next Stock Sermon Sunday and throughout the next week. Is we could get some extreme volatility going into our earnings season along with this Venezuela news. Okay. I also want to talk about, for those that are fairly new to me and haven't been with me for a full year and you're new to us, how do you approach investing and trading into a new year? A lot of people are excited. They're anxious or in a good way of, man, like I'm starting to get this. How can I turn around? You know, I was trying to teeter-totter in 2025. I had a good 2025, long-term investing, maybe some short-term trading, but I'm trying to really capitalize now. Okay. And I can tell you right now, personally, just based on historical data, we've been running for the last 3 years, okay, since the 2022 bear market. So anytime you're approaching a fourth year of a bull market, we've had 20+% returns on the overall market in the last 3 years. So this year, it doesn't mean it's going to be a bear market unless it does. It doesn't mean that we can't run higher, but the returns overall this year might be very stagnated. So we might get that, maybe 8 to 10% return, maybe 12% return, right in that 10% range, just based on historical context, right? Doesn't mean it's going to happen, not financial advice, but can we have a green year? Yeah, we can. But 3 years running for 20+% for the last 3 years, and that second midterm year of a presidency can be a little iffy, which creates a lot of buying opportunities, okay? Because some of these companies might be stagnated, they might pull back a little bit, they might look like they're going higher and then fail and come right back down, kind of like what you saw on Friday. So just kind of keep that sentiment around this year, and especially going into the first quarter of the year so we can set the tone, all right? So just in case you didn't know, because sometimes we have new investors / short-term traders that come into the space, right? Or maybe are rewatching this or coming onto this channel and saying, hey, man, I'm going to start my account. I'm ready to go. And you're previewing it based off of what 2025 did, 2024. It's just like, it's going to have an absolutely amazing run, but we have to treat each year and each quarter, right, differently. We have to approach it from a broad-eyed perspective and look down and say, hey, I want to react. I want to kind of see. Doesn't mean don't keep buying, but what are the opportunities and what should I expect? All right. We good there? Let me check in. We're still good. Awesome. Cool. So let's jump into the charts immediately here. Okay. And hopefully you've appreciated those Saturday, or today I dropped it on Sunday, kind of giving you a preview of what the Stock Sermon Sunday is, because being here live, what's the advantage of that? Asking questions. So I can teach a little bit, right, on a public platform, no charge, no nothing. I can answer questions live here, right? But we don't have to make it a 2-hour Stock Sermon Sunday here, and I'm having to repeat everything. So if you go back and rewatch that Venezuela video, right, I'll summarize it here for you, that the Venezuela, US, and how China is involved will affect oil prices or the oil industry in some form or fashion. So I'll just point out some two big ones, obvious ones here are Exxon, more so Chevron, because Chevron is located more so in Venezuela. I don't believe Exxon is in Venezuela, but correct me if I'm wrong here. But CVX, Chevron should react positively. So if you're interested, like I said in the introduction, if you're interested in trading something new that you normally don't trade, and meaning with options, okay? Or if you're looking to do equity trading, meaning just buy shares for $150, $160 per share and see if you can get that 170, break into all-time highs, and maybe you just trade equity and get a little squeeze out of it based off this news. And if it continues for a whole quarter, right, and maybe this situation doesn't die down yet, what does this chart look like? This looks like bullish consolidation, okay? We ran up, and now we're consolidating, trying to get the next breakout leg, okay? So there are two different ways that you can invest or trade, right? You can trade with options, okay? Looking for how we normally look at charts. What does this look like in the short term? This looks like a run up here, bullish consolidation flag. We're getting a break of structure right there. Typically that break of structure tries to head back to the highs. So you can look and see in the morning, does Chevron sit around 155? Okay, it's going to 160, breaks 160, going to 163, breaks out of that. We're probably breaking into new all-time highs, maybe 170 plus, and you'll have a candle that looks somewhat like that. Okay, so very simple chart, looks good. Okay, if you're in leverage reversey, we'll talk about it. There's a little gap fill right there, so inevitably it's probably going to go up probably to 160. Okay, if not already in the morning, it'll be there gapped up. Okay, so Chevron, and if you look at this, if you've never traded it, I talked about in the last video here today that I posted before, that Chevron has fairly inexpensive contracts. So minimally, if you do trade it, just to keep it safe, I'd probably go out to February 20th here. If you even want it less than that, maybe the end of January, right? And look at that as a quote unquote short-term options trade, right? I would really not personally mess with anything shorter just in case, but January 16th, those would be fairly cheap. I would look at the 157.5s or 155s, right? But January 16th, January 30th, February 20th, and if you want even super safety, go out to June, okay? Go out to June looking at that 170 as a target, okay? So there's some free game for you for Chevron. Exxon, okay? We have traded Exxon in the community before. I've talked about it before. And the reason I haven't mentioned it, a lot lately is because it's been chopping around in this zone really since 2024. You can kind of see this just chopping around here, but now it's building. Okay. So it is breaking into new all-time highs, as you can see there, looking at that 120 mark as your newfound support. So 120 right there, as long as it's above 120, it's probably just going to continue to trend higher unless it does some okey doke and we fail back below there. Okay. But if you've been learning the charts, been binge watching the videos, been listening and showing up daily, as long as it's above all these moving average stacks here, daily 20, daily 50, daily 100, you can continue to ride this higher. Okay. Same thing with Exxon. It's a great dividend stock, obviously, if you didn't know. Okay. So if you want to buy shares, if you hold shares already, you're doing great. I would look at that February 20th. You can look at those 125 calls. Even further out, going into March 20th, 125, maybe 130 calls. Just keeping it right around the money and at least putting 30 days minimum on it. Unless you're day trading and scalping, then we could look at some of these January 16th calls right here. You can see the open interest on that 125, right? It's already at 52,000 on that open interest. Okay. So please, if you're confused at any point or you're new here, please do not hesitate to ask any questions down below. And I will get to those comments shortly. All right. So those will be the main two if you're looking to trade options with it, or that are going to be the most, in my opinion, liquid, that are going to move properly, Exxon and Chevron. Okay. Now, another one that I have traded before, whoops, sorry about that, that I have traded before and does move as well is Oxy. Okay. Oxy showing support right here at $40. You can see it bounced right there, came back in here and kind of consolidating and trying to curl back up on the weekly. Looks like a double bottom there of Oxy. Let's see, stack right there. So it looks like it's trying to trend up. It is a slower mover. So I would look at share or equity trading here and just buying the shares, holding them, or going all the way out into the summer, in my opinion. Okay. So going all the way out until June, it would be a lot safer there, or March. Okay. Those would be the shortest dated ones I would look at. Anything shorter than that, you might get some chop. It doesn't really move how you normally trade our other big tech stocks. So Oxy is the third one that I would look at personally. I mentioned in the last video, this SLB looks really good. Okay. I don't trade this. I rarely look at it. It's in my watch list here on oil stocks. I'll go into defense in a second. But if I'm just looking at this from a chart perspective, do you see how right here around this 30 to 32, it formed an inverse head and shoulders? You can see some buying that happened right there where I marked this level and it went back up to roughly 60. Okay. And you can see what it's doing right here. It's starting to curl out of there. So maybe looking at this as well. Okay. But another one that may not move as liquid, meaning as fast or as normal potentially for trading options as our normal tech stocks. So just make sure that you put time on it if you are going to choose to trade options on this. Otherwise, I would just maybe dollar cost average on shares, maybe do some equity trading, right? And see if you can benefit off of this oil war slash Venezuela takeover. Okay. I'll do some honorable mentions and then we'll move to our normal day trading stocks and also potential long-term investments for 2026. All right. Let's go to our defense sector and let's go to LMT, Lockheed Martin. Okay. Lockheed Martin here, obviously it's almost a $500 stock. So do with that what you please. If you have a larger account or if you already hold it, whatnot, it looks like it's trying to trim back up to 600 and trying to take off a new all-time high. It does have some gaps as well that are unfilled. I think I showed it on the video last. You can see right there, unfilled gap, and it's starting to double bottom and then starting to form some higher lows on a daily chart, curling up above the moving average stacks here. First target 512 and then ultimately 520, and there's really nothing left until back up here. It may have some pit stops, 550, 560, but based off of this chart, it looks like it's trying to do something like this. Okay. So Brian, does this mean you're going to do something with some of these stocks? Maybe. More so for me personally, Exxon, Chevron, Oxy are probably going to be my main. But I like to mention obviously the others, defense, right? Halliburton, another one there, looks really, really good, curling up off of here. It does have earnings coming up as well. So could this benefit off the earnings plus this trade war? Yes, it's also a very cheap or inexpensive stock as well, right? If I look at this Fibonacci retracement here, I pulled it from the lows to the high stack here, and it looks like it's trying to gain momentum from this golden pocket 38.2 retracement, all right, which would ultimately look something like this. Obviously not one fell swoop like that, but you can look left and see the possibilities off of this stack, right, on a monthly chart. So you can see the monthly, how long it took. This could go from 24 to 40, roughly 1, 2, 3, 4 months. So the first, there's your first quarter, right? So these slower movers, the ones that we normally don't trade, if you want to look at them or put a watch list out, there you go. All right. So I'll leave it at that for right now. If anyone has the others that they want to mention or bring up, you're more than welcome down below. All right. We good? All right, cool. Let's keep moving. Let's go to, and please put anything that you would like. I know I have a lot of requests for Palantir. I'll do a separate video on that like I did with SoFi. So look out for that this week. Again, the longer you've been doing this, and if you've been doing it longer than 5-6 years, I've been trading since 2018, going in 2019. You get more comfortable just easing into the year, okay? Because you have to get a sentiment of what actually the market's trying to do, right? And we saw on Friday there was a little bit of a pump fake, right? And that's kind of what we're trying to see. This is the first full week of a 2026 January. Okay. So again, easing in, stacking the wins. We got a nice win, an awesome win in the trading room on Friday with Google, NVIDIA, if you won on that, if you held, if you know, and then SPY, QQQ, and some others. Okay. So I'm not really, if you've noticed, I'm kind of giving levels, but again, my midweek kind of Tuesday, Wednesday videos are going to give a better indication saying, hey, this is going to happen. If y'all have noticed, my midweek videos are very, very specific, right? My Sunday videos are more so a thesis saying, hey, let's watch this. There's a sentiment. I still see downside. We need to see what happens and where it goes. Okay. So we can get some true levels. All right. Let's go into SPY. Okay. Let's go into SPY. So on your charts, if you had them up, or if you want to if you're just watching and listening, the first level I want you to mark is right at this 685, 686 mark. Okay. 685, 686, because that is the previous 2025 all-time high that we were trying to break for so long. So yes, we are still bullish, but you have to pay attention to these look aboves and fails. Okay. Because that signals that, okay, Why didn't the market to finish off the year stay up here and finish like that? Okay. Is that just a liquidity grab? Is that just saying, hey, push it up one last time so we can get our final little portfolio profits for the year, our 40+% from the April lows, and then bring it back lower, right? So we need to pay attention to this kind of 686, I would say even 685, like that dollar range or so, because that whole area right there, you see that big breakdown, okay? That showed that was a failed breakout right there off that candle, which was on a daily. That was the Thursday candle. Excuse me, Wednesday candle. I'm sorry, because New Year's was on Thursday. So this was the Wednesday before New Year's candle. Okay. And then we came in Friday to start the new year, and we started with this type of candle right here. Okay. So now we are slightly back into this zone of what happened in this area last time. Okay. Look right here, came down where? To here, which is roughly about 676 and some change. So this is the range where, like I just told you, I'm trying to get a better indication is, okay, it was just a pullback, bam, right back up, okay? And this was a fluke, cool, we're going back higher. Or do we consolidate in here to go lower? Right? And it starts to kind of just roll over there to retest 679 like it did here. You see how it just sits in here. We never recovered back up, sits in here, rolls over, and then we can't give way, or we give way, excuse me. Right? Can I get a 5 in the chat? Does everyone understand that? Right? And hopefully you appreciate it. I know I repeat myself a lot, but I know I have new individuals. So if you know, if you're a speaker, a communicator, educator, right, you always have to address that there's new people coming in all the time, right? And you have to understand that, again, this right here, most people only see upside, right? So when they see downside, they're like, just pick up the dip. That's the age-old question, right? For everybody is just say, hey, it's fine. It's fine. Just pick up the dip. Well, where's the dip, right? And I'm stressing that because my targeted audience, at least for right now, is trying to be, number one, the professional that already knows how to invest, but doesn't necessarily know where the best buying opportunities are or how to trade options. And then the complete beginner, right, is essentially saying, well, I've always been told this. I only see the market going up. So when it goes down, I just think to buy, right? But buy where? Enter call options where? Right? Let me know down below if you can type out, or if you're available to, if you got on your phone or whatnot, if you've ever struggled with that when you're trying to trade, or if you've traded or tried to trade before on your own and you said, man, it's a red candle. I'm just going to pick up a call option and try it out. And then it just keeps going down and you don't know how to necessarily trade put options. All right. Has anyone else struggled with that? Okay. I'm trying to get people to flip the script and say, well, if I only see upside, right, I have to wait, very similar to when you heard me say, wait for the 674, 670 pullback. How many people remember those videos? Can we get the 674, 675 pullback, right? So if you waited patiently for that pullback to here, entered, you made money going to the end of the year. Very similar to here. We need to see what happens in this area, okay? Cool. So if you only see upside, be patient, right? Don't assume it's just going to snap back up just because we're on a dip, because you saw what happened on Friday, right? Let me go into my 5-minute chart here and let me show you exactly what happened on Friday if you were not in the market. Okay. This is on SPY. Here's the first candle that we got on SPY. Bam. Oh man, we're going. Nope. Gave the whole move back. Right. Or if you saw all this pre-market upside, so you saw in the light gray area is the market when it's closed, okay, or the after hours, okay. The dark black area is when the market is open for the New York session for us here in the United States, okay. So if you see all this green when you wake up in the morning, what does our mind first think about? Oh man, calls, we go up, right? but that's not how the market works, right? So we have to flip our psychology, and why the charts matter so much is if you're only looking at a Robinhood on your phone, no offense to that, or you're only seeing green in the market and you wake up and say, oh, I'll just enter a call and see what happens, right? Or we're red, you're like, oh, we're going down. I can make money on put options, I heard, so I'll just enter a put and see what happens, right? But the biggest struggle that I see for anyone that I'm teaching one-on-one, or that comes into Leverage University, or that comments on this channel saying, hey, you helped me out, is entries and exits. Okay. Where do you enter your call option trade if you're trading options? Where do you enter your share position? For example, Netflix, right? How do you get the lowest average cost on Netflix? When will it stop dipping? Where do you get your entry? Where do you buy Oracle if it keeps dipping? How do you know when there's going to be a return or a curl or a move back to the upside, right? That's the key. That's why these communities are here. That's why myself, are trying to explain this in a way that people don't get bamboozled, that don't get discouraged, and they're more empowered to say, man, okay, I can buy when Nancy Pelosi's buying. I can buy when they are trying to trick me and flip the script and drive the price down. I'm not a part of that because I'm waiting, right? And I know what they're trying to do. And that just takes time in the market and being on these lives and being engaged. Cool? 5 in the chat, everybody with me? Everybody with me? Fives. Everybody with me? Okay, cool. All right. Perfect. All right, so there's SPY. Okay, just gave you your levels on SPY for this week. I'll repeat it if you didn't hear. Okay, so my first sentiment are pops and fades. So my community already knows inside of our trading room, inside of Leverage University. Again, if you have not joined us yet, just a quick plug. The final level, the final code, if you want to use it. Some people are paying full. They're like, Brian, I just want to support. I feel bad, whatever. Right. But if you do want to join, there is a small discount code right now, holiday 30. Okay. Holiday 30. Some people have done the yearly. Some people have joined their mentorship, whatever it is. If you feel so inclined, if not, take your time. No problem at all. If you like trading on your own, you just need levels. That's cool too. Okay. But what we'll be looking for inside of our trade room this week is I want to see the upside here. So if you know, y'all know what I'm talking about. If I see something like that, the first thing someone else is thinking is, ooh, we're back. What I'm thinking is we're right back into resistance. I might want to see how we react up here. Bam, right back down. Okay. So that's what I would like to see, is a little bit of a pop higher, maybe into 685 again. Again, remember, previous support now becomes resistance. Previous support now becomes resistance. You see right there what happened right around there. Bam, right there. What happened here? Bam, right there. What happened here? Potentially down, retesting these lows again. Okay. So that's what I'll be looking for ideally. Okay. If we break below 679, we're going pretty much straight into 675. And if you see here, there are some gaps down into. So there's my trade idea. There are some gaps down here into 670. Okay. So that's what I'll be looking for. Do we pop into there, start forming lower highs, and then we do that? If we reclaim and we do a big overshoot back to the upside up here, and you see it going and going and going and going, don't chase. Let it break, pull back, and then you can take it up for trading purposes. Okay. For options, just so you make sure you have the right entry and it's confirmed. Okay. Qs. It's underneath all the moving average stacks right here. You can see right there, I can use those as resistance. So look at that resistance right there. Where did it reject? The daily 20, that's at 618. Where did it also reject? Right here, the daily 50, which is 615. So as long as it's, if I make this really large here, this whole area right there in that zone is all resistance for right now. Okay. For right now. So if it's chopping around in here, it looks like it's going higher, and then it just, rolls over and comes like that. That's what that would look like. Okay. Where is it headed first? When you're in a downtrend, very similar to the uptrend, is trying to take out the low. So when we pop, if bears think they have control, they will try to pop it and then try to retest this low back down here at 610. You take out that low. That's when you get that gap fill. So you got 2 trades. Okay. You can try to top ticket, which sometimes we try to do because I'm on the charts. I'm in live trading. We enter right here into perfection and it rolls over, or you can just wait for it to break a new low, and that would be break of 610, and you know it's going down into 600. Okay. So either trade. Okay. Now, again, we're always prepared for both. So if we get a big overshoot and it breaks and it just keeps grinding and grinding and grinding higher, and then it wants to sit up here like this, then we're going back up there. All right. Cool. IWM. It's kind of in between a rock and a hard place here. IWM's not the best looking chart in my opinion, but if it follows the overall broad market, it could reject this 250 again, but it's just kind of stuck in here. Right. See, when it got above this 245, it blasted through and then it went higher. It could do the same thing, you know, if it overshoots like that and small caps recover, you know, it could, you know, trend up higher like this. So I just need to watch IWM a little bit more just to make sure that it's not turning into a bull flag, right? But if I see the overall market rejecting, then IWM most likely will do the same. So it would look something like this and then pull back down to there. Okay. So we'll just have to see, but IWM, you know, sitting in support, it is still bullish. Okay. So all these charts, if I'm talking about rejections or pullbacks, right? Again, I'm not saying that we're bearish or that we're, you know, extremely weak. I'm just saying that it could want to pull back into a deeper level to try to take out a new all-time high. But with this kind of Venezuela thing going on, I think personally, the earnings will have to take us there. Remember, earnings season is coming up into the beginning of February, middle of February. So if we get those tech earnings that are strong, that's where I see potentially we could take out a new all-time high, right? So if we trend back, and sit here, and then tech earnings come out, and then we go like that, I could see that. I could see that. Okay. Cool. Fives. Everyone's good. Awesome. Everyone's on the same page. Looks like we're rolling. Everyone's just like, Brian, I understand. Just give us the levels. We're good to go. We're good to go. All right. So if we see the broad market still rejecting, and you've been watching my videos, and this is just kind of a refresher and to be here live with me, you already know my sentiment on majority of our tech stocks. Because if you were in our live trading room inside of Leverage University, or if you watched the review video I did on Friday, right, I talked about these massive look above and fails on a lot of tech names, right? So here's Apple right here. This is looking like potentially a head and shoulders. That is a pullback / bearish sentiment. Okay. And the reason being is because if bulls were strong here on the tech sector, we wouldn't have had this big look above failure like that. Okay. So bulls need to step back up. It's not to say that tech is not strong, right? But it may want to have some profit taking risk off with this trade war thing going on. So if you're up tremendously on all your tech stocks for the last 3 years, and we got a trade war starting of 2026, and then we got shakiness into a second presidential term, we also have the real data reflection, right? Because President Trump, 2025 was his real first year, right, of his second term. So now 2026 is going to be that kind of reflection. How are these rate cuts going to actually affect the market? How are we going to have future rate cuts? We're also going to have, if you didn't know, a new Fed chair, right? Fed Chair Powell already announced his retirement, right? His term is going to be up. So how is the new Fed chair going to actually, is he going to be a yes man and be like, yeah, I'll just cut rates because Trump said it, right? So all that is giving a potential sentiment of a, I don't know yet. Okay. So I'm reading that fundamental, meaning the news, as also a reaction of how the charts are looking. This just tells me that, hey, big money or investors that have rode the wave all the way up for the last 2 to 3 years, okay, from 2023, have said, maybe it's a little time to take some profits off the table. Okay. I don't want to be too greedy. That candle right there on Apple specifically, if you look on Amazon, same thing. right? I have my community or group, and y'all know who you are. What's going on with Amazon, right? Well, that 235, it doesn't mean Amazon's not going to hit 300 at some point. I believe Amazon is going to be $300 at some point easily. But that 235 is a beast for right now. 235, 235, 235, 235. Right? So just because you love a stock saying, man, so if you hear on the streets of Instagram or other social platforms or other YouTubes or whatever it might be, and someone may say or signal, hey, Amazon is a 2026 winner. Well, how does it get to 300 is the key, right? So very similar to the April tariff move, right? Amazon was at 235, and guess what? It was also looking like a winner. Bam, right there, right there, right there. Man, we're going to 2025. Amazon is going all-time highs. Nope. Pull all the way back to 160, and then we go. You get me? So it's not that it's not going there. It's just how do we get there, right? So that's why the charts are so important, because I'm not doubting Amazon. I'm not doubting any of these stocks. I'm just saying, can we get a deeper pullback yet again and pull Amazon all the way back down to close to 200, bounce right there, and then go higher? Well, guess what? How much is that? How much of a pullback is that if we go from here and it does pull back to there? That's a 20% pullback. A 10% pullback would be right around 210, fill that little gap. So yeah, we could see Amazon back to 210 if it consolidates and stays below this 235. If it breaks above that 235, 236 level and mounts above, really, I would say 240 would be your key. Above 240, then cool. We know where we're going. Right? So the charts tell the story. I'm not a genius. I don't know where the market's going. I react and I'm like, okay, I mean, y'all can be bullish on Amazon you want and take calls up into 235 if you want, but it has not cleared 235. Right? So I've talked about this before. If you've been here on YouTube with me, if you're inside of our community, inside of Leverage, you know what I'm talking about. I'm not bearish. I'm just reacting to the charts. I'm not overly bullish or whatnot. I'm just reacting to the charts. So I can't take Amazon calls and hold them, right? That's the difference. You can trade both ways, right? You get me? Well, Brian, does that mean I can't trade calls? No, but where do you enter calls on Amazon? With this type of move, probably closer back to a deeper weekly support, which would be closer to this 218. And then you got a little bit of support sitting at 220. So those would be your support zones. So if Amazon pulls back into there, okay, cool. The risk to reward is better. Then I can rotate Amazon back up. Get me? But it's the folks sometimes, and I'm saying this because I get messages, right? Like, dang, Brian, I entered Amazon and it was going up, but I didn't take it out soon enough. Or I entered puts and I didn't mark my support levels, and then it bounced off of that. So you're just entering wrong. It's not that you don't have the right idea. You're just maybe not comfortable in the charts and you're not entering your position at the right time. Once you start getting that, or you learn from someone, or you keep practicing on your own, that's when the game changes to say your thesis was right, but your entry was off. Right? You know how I know? Because I used to do it. Everyone has done it. Cool. Game changer. All right. So there's Amazon. There's a little teaching lesson there. Let's go into Google. Same thing, same look. Now, Google looks a little bit better because it did not fail back below the daily 20. If you notice, Amazon is back below all these moving average stacks. The next moving average is the daily 200. That's probably where I'd be a little bit more comfortable on Amazon going back to. It looks like a little bear flag consolidation. If it breaks this trend underneath this 225, or most likely in the market gets weak, going back to that 218 level and the daily 200, this orange line right here, okay? Google. You can see Google's a little different outlook. It did reject pretty hard there at that 321. Absolutely monster trade on Google on Friday for us inside of the community, but Google rejected perfectly right there off of that rejection resistance. But you could have taken Google to the upside, right off open if you wanted to, but it was so overextended, it gapped up. There's your gap right there. What is our gap fill rules? Overextension, RSI was overextended in the 80s. Easy put position, trap late buyers that chase, pull them back. Okay. So Google, 312, maybe 318. Don't really like the look now. Need to see it, what it does here. Either breaks below that daily 20 there of 312, or it's just going to chop into here right now. So I'll wait for the next trade on Google of what it does in there. Okay. Microsoft, not the best look on Microsoft. Again, I'm not perfect. If someone, I'm just telling you the message that I get. Someone said, Brian, like your thesis and where the market's going, I don't know how you know this stuff or whatnot, but it happened. I'm like, I just didn't see with this big double top here and low volume rises on SPY and QQQ going up that Microsoft could really bounce and go all the way back up to highs, right? So with that, this is looking more like a bear flag. You got all of this overhead trapped supply resistance up here pressing down on this level here. Okay. So underneath this 500, underneath this, level there, it's all trapped that are selling and trying to get it back up. Okay. And also we failed back underneath. Let me make sure everyone's typing. Google paid well on Friday. They'll rebalance and sell. Most likely we'll see November low and revisit tariff lows second quarter. Yep, I agree. So I'll summarize for everyone what Tanvir is talking about. Okay. So underneath that daily 200, not a good look. That's 477, at least for right now. Underneath all the moving average stacks, that signals weakness. I mean, if you look, you already know, I don't have to say anything. If you watch the videos and you watch that gap fill video, what are all these things with it trending downwards? Maybe it has a pit stop back down to here, and then we can see what happens. Okay. Meta, same thing here. Meta's just kind of chopping around. I mean, it looks like if the market gets weak, it wants to trim back down to retest these lows of 600, maybe that little gap fill right there. But if it reclaims, we get back above the move average stacks there, then we can start trending back to the upside. So we just need to see a reaction first on Meta. But ultimately, I personally would rather or like to see Meta just absolutely just tank and be back closer to underneath 500, fill some of these gaps down below, and we just get an absolute, massive buying opportunity down here to rotate up. But we shall see. Okay. Netflix, mentioned it. Netflix is like on my top 2026, 2027, into 2020, into 2030. If we can get, Netflix back down into $50, like something like that, I think personally, just right in here, it will have a recovery bounce. So I think dollar cost averaging in the mid 80s, if you so choose. I know people have reservations about Netflix and the Warner Brothers deal, and I don't know, but just it's Netflix. Okay. Like, just be practical about it. Right. Also look at the NFL. Like, where are we headed? Okay. So it's just about looking at the charts and seeing where we can get a best buying opportunity. I would love this retest to about 60, right? Somewhere around there. If we can just get a dump of and to do something like that, that would be beautiful. That'd be absolutely beautiful. Okay. So keep your eye on Netflix for 2026. Dollar cost averaging in, so you don't have to time it. But there are some gaps down below. I think we'll have some buyers step in right around this mid 80s. So I think that 83 to 85 level can pick up some shares. But just notice we got some unfilled gaps down below that it could look like an oracle, right? It can look like it wants to stop. And why does it keep going? And why it could look like this? Doesn't that look almost identical? New all-time high, and then it pulls all the way back to where? Right in that zone. Okay. Cool. Check the chat. Microsoft wants 390. Yep. Underneath 400, we're sitting at the same level, Tanvir. Same level, man. 390 to 400. I'll know what it looks like when I see it. And I'll just wait on those levels to happen. Hood. Okay. Hood is another one here that, and I'll jump into NVIDIAs and AMDs and so on and so forth. Hood had a different look on Friday. Okay. You can see this daily candle here. It looks more like a hammer kind of doji candle. You can see the bottom wick is a little bit larger there on that candle versus what you just saw on the other tech stocks. So this signals that we have some exits of some shorts. Okay, that's what this candle's telling me. That means everyone that was short and has been shorting with puts or profit taking or whatever, okay, are taking their profits in support. And you also potentially have buyers, right, that may have stepped up a little bit to say, hey, it's close enough to this 110 level. Okay, I may want to try some upside momentum movement back on Hood. Okay, so Hood is a different outlook. This looks more quote unquote bullish, or we're in deeper support, but we still have to see how it reacts and if we actually get momentum back up. But the first target, I would say this first gap fill, if we break previous day highs, which would be right around that 116, 118 level, you can get maybe a move back into the daily 20, which would be right around 120, 125. Okay, very similar to what it looked like over here. You see we started trending, then we held that kind of 118, and then we moved up back into close to 140. All right, so if you like to trade Hood or looking at Hood, right, it is sitting more so in a support range than anything. Okay, NVIDIA. If we look at the daily candle on NVIDIA, where is it? Sitting right into resistance. Doesn't say that NVIDIA can't go back up to 200 plus. That's what people are waiting on to get that final push on NVIDIA. It's not the best looking one, but we've been killing NVIDIA personally all in here when most people are maybe leaving it alone. Very comfortable with NVIDIA, trading it with $3 to $5 moves. But NVIDIA looks like more like a double top here. If you can see, pull back, tried to rotate to take out that. What you have liked to see on NVIDIA is a takeout of a high there. So if you trade NVIDIA, if you want to look at it, gotta clear. I mean, even this, like, I mean, it could push up and still fail, but I mean, I'd probably need to see a daily close above this 195. I mean, I would need to see a daily candle look like that. Okay. So just watch out for NVIDIA that this could be a little bit of a double top showing failure to go higher. And then it consolidates in here potentially. And then we got some gaps fills down below. If the market gets weak, you see those gaps below. Okay. So I will be looking at NVIDIA underneath this 190 level and 193 level as a really good potential risk to reward. You already know right there. There's your small risk. If we enter puts, there's the potential reward. All right. That's what's going on in my mind, even if I don't draw it out all the time. But why would you enter puts on the strongest stock in the company? The world, because it's in resistance. Right. It's not to say I don't think it's the strongest company in the world, but it is in resistance. Okay. So I can trade it off of resistance back down, and then, we'll reevaluate from there. All right. AMD. AMD, I love, if you know, I love when I get reactions off of daily moving averages. So you see it's pushing right back up into that previous support, into a resistance of roughly 225 to 227. If I continue to see that reject, I do have an A+ setup that does have a double top and a gap below. If it tries to do this and I get some rollover there, can we get that? Okay. Pull back to 215, ultimately back to 210, and we're rolling back under, but it's kind of in between these moving averages. Okay. So you don't want to short into the daily 20, which is roughly around 214, but you can't take or shouldn't take call options on trading back up into the daily 50. Okay. So it's kind of in this range. It's at the top of the range, and we can rotate it back down if we so please, but we need to see confirmation. All right. So we'll look at NVIDIA, AMD, both in the same ways. I'll get to Palantir because folks got some questions. All right. The two strongest semiconductors, which essentially what you're seeing is rotation, right? From NVIDIA, AMD, you're seeing rotation from the chip maker here, TSM. And it has some positive news as well. MU, just absolutely. I remember when we were Was it you, Tanvir, that was asking about MU back at 100? And just out of just MU is just absolutely a beast, right? Does this mean trade with momentum, right? But I think majority of us are maybe looking to say, where can we get, it's kind of like a Google, where can we get a ceiling, like a final resistance where it's like, all right, now's the time for you to cool off, right? It's just difficult for, me personally, because I trade risk to reward. I don't really trade momentum. If I see all this going up continuously, I could trade, but the one day it doesn't, kind of like right here, just pulls back out of nowhere. So we'll see. But we need to see some failures. The RSI is just absolutely ridiculous. Doesn't always have to, come back. But yeah, up here in this overbought zone. Let's see some others really quick. Palantir. All right. Palantir still bullish, right? But it is, we talked about, I believe, in one of these Stock Sermon Sundays, I've mentioned it before, that Palantir is trading almost 600 times its earnings. All right. So that just simply means the price of Palantir versus the growth potential or how it's growing. It doesn't mean it's not making money. Doesn't mean it's not profitable. It's doing well, but it's hard to keep up with being the big dog for so long without pulling back. So Palantir is still bullish above the daily 200. Okay. I'm on a daily chart, but if you can see in the short term, it is weak. So where you're quote unquote concerned for people with Palantir saying, man, should I trim some? Like, should I make sure I'm protected? Should I set a stop loss? Like, is this going to stop? Is, in my opinion, close to maybe 160, maybe making sure that holds. But that underneath that daily 200 is not necessarily the best thing. Okay. Underneath that daily 200, we have changed trend. And that means Palantir's got nothing but room, in my opinion. It will be extremely oversold on a short term. But if you look on a weekly and a monthly, look at the RSI on a monthly on Palantir. Right? So it's inevitable that we're starting to form a little bit more lower highs. We got a top wick there on a monthly chart from December, right? And we need to kind of hold up this thing right here. Okay. So I would like to see it hold up 160 more specifically, but we do have a final kind of last leg there at 150. So you just kind of look at a monthly chart and make sure we don't get a monthly that looks like that, because then we've got, it could create a great buying opportunity for people, but a lot of folks have, if you know, Palantir down here, Palantir in the 60s and 70s, right? And even some people got in late to the game. They got Palantir, average cost 170, 180, right? And those people are wondering what in the world. Okay. So just from a chart perspective, just watch that. Okay. So I know some of y'all are already going to comment, maybe 10 Veer is like, yeah, Palantir is just, I got it back to 50, 40, 30, stuff like that. So don't scare folks, man. Oh my gosh. MU's forward-looking P is actually below industry average. I feel it'll continue to rocket 325. Yeah, I haven't seen any issues with MU at all. NVIDIA calls above 192, and I'll take it to one. Yep. But until then, shorten the pops. Exactly right. Cool. At this time, I'll take any questions anyone has, any thoughts, perspectives, questions. It could be about anything. It could be about you personally. If you'd like to share, you do not have to share your personal business, but hey, Brian, how do you do this? Or how do you do that? I did a masterclass inside of our Discord yesterday, a kickoff call for 2026, just kind of going over, how do you plan out a year like this? How do you, beat the market more specifically? Right. And I'm talking about long-term investing and trading as well. Go once, going twice. I know people are like watching on their TVs, got my big head on a 75-inch. So if y'all can't type, that's perfectly fine if you're just listening and watching. All right. All right. I'll mention some outliers as people are maybe getting some final thoughts, questions. Keep an eye on the healthcare sector. All right. It's not sexy. It doesn't move crazy. I mean, other than Lilly, right? It may not move like your tech and whatnot, but keep your eye on the healthcare sector. It was a major contributor to the upside of SPY towards the latter half of 2025, and it still really didn't take off, right? Everyone talking about UNH going all the way back to all-time highs in 3 months, and it really didn't move, right? The healthcare sector is typically a recession kind of indicator, right? It is something that moves to the upside, very similar to silver, gold, commodities, right? People will move their tech profits or uncertainty into healthcare, and not saying, that, but that is a sector we need to kind of pay attention to. So if I go to my sectors here and I go to the XLV, okay, so this is the sector ETF. So I can look at the overall sector of healthcare and see that it was bull flagging and it was lagging all into 2025. And there's the bull flag right there, right there. And it's still looking very bullish, right? So if we get a little bit of a pullback, or, it continues to look up on the up and up, right? This is breaking new all-time highs and the healthcare sector is going up. Well, CNC, okay? Talked about this in my community, so shout out to everybody. If you I mentioned on the live stream as well, the CNC right at about 25 to 26. So if you picked up shares on those, I mentioned them at 25 bucks. It's still within a buy range, okay? Still within the buy range. So if we get a little pullback on CNC or something like that, it could, pull back, obviously. But this could rotate all the way back up over time in the next, couple years, but it is recovering nice. Just look left off of that 25, where did it go to? Right back to 75, okay? If we go to UNH, okay? UNH obviously bouncing off of this low, right? It is getting some rejections off of that 350 mark. Could it come all the way back down here and retest and double bottom? Yes, you got to be prepared for that, right? So if it does that, let's see if it can double bottom and you get another opportunity underneath $300 on UNH to take it back to the upside. So keep an eye on UNH. Obviously, Lilly, just absolute beast. Okay, so your level on Lilly will be close to $1,000. I think at some point Lilly will probably, and don't quote me on this, they might have already done a stock split, obviously at some point. But if Lilly does a stock split very similar to what Netflix did in 2025, we can get Lilly at a cheaper price. Or if you already have Lilly shares, there you go. But a lot of people will just turn off things when they see $1,000 per share, right? So that's why we have stock splits. Okay. All right. What else? I think that's really it. Yep. Dr. Riley, what's going on? I appreciate you joining us inside of our community officially via Trent. Welcome. But you're asking about AMD. For AMD, are you waiting for it to fall to support to place a call? Great question. Right? Great question. So let's work backwards. And this is a perfect example of, I never want to lose anybody when, they're thinking something. So when they ask about, what do you think about AMD? Well, what are you trying to do? So if I'm reading Dr. Riley in his question is saying, okay, he's mentioning a call. So I already know that he's looking to trade it, right, with options. Someone else could say, what do you think about AMD? I'm like, long-term, do you want to buy shares? Like, how much money do you have to invest? Like, what are you trying to do? Okay. So the first thing I want to do is look at the monthly chart. Okay. Because we're entering a new month. So I want to analyze the strength of AMD, obviously. Okay. So this is strong, right? Strength. And then we get a pullback and we're getting some more strength. But if you're noticing, Dr. Riley, you can see here that we have AMD into resistance. Let's look left. What happened to AMD when it got around 227, right? It has the possibility, does not mean it's going to do it, but it has the possibility to pull all the way back underneath $200 back to 150. Okay. So what you're asking is, if I want to enter a call option on AMD, okay, I want to find where support is. So the most nearest support on a monthly chart is going to be somewhere around this 213 to 215 area. Why? Because this candle closed right here and it got bought up all the way from 197 to 213, at least for the time being. The previous month closed right here at 217. So technically on a monthly, which is why I don't like to look exactly at a monthly, but this all is support. Okay. But if I look at the candle that is forming right now, that's not a lot of, there's no bottom wick on this candle. The wicks on the candle signify, and if I'm over explaining things, hopefully it's benefiting someone else, but I do it for a purpose. The bottom wick of a candle does not matter the color of the candle. The bottom wick of the candle signals that there are buyers present or anyone that was shorting is exiting their position. So because I see a large wick here from 195 all the way back up, that signals that this area, there are some buyers present in that area. Okay. If I don't see any bottom wicks on a candle, right, that's not, even though it's green, it doesn't signify that that's a very strong candle yet. It's just opening up higher and right into resistance again. Okay. The top wick signals that we do have some profit takers and sellers. So that's my monthly analysis. So the lower I go now, okay, into a weekly and a daily, that level is still there. So I'll get to your answer, Dr. Riley, is where is support? So if you wanted to try a call option, ideally, you'd want to look for AMD to hold or enter or pull back closer into this 215 to 212 zone, because you can see the reaction at that zone multiple times. Right there, bam, right there, bam, higher. Okay. So anyone that entered right here is taking it up right here. And guess what? If I go down to a daily, look at that type of candle, like I just said. So here's how I would look for drawing. Now I'm in a daily chart. So if he wanted to enter a call option, what you want to see on maybe the next couple of days is pull back like that. That would be the most ideal. And he could find his entry closer to this 215, 216 level, and then rotate it back up. Okay. And see if we can take out that high. But enter or proper entry will be closer into this 215, 216 zone. Okay. That'd be the most ideal. Well, what if that doesn't happen? Well, maybe you get some other levels and maybe you can do a breakout of 230. What if it never pulls back and it just keeps breaking out like that? Okay, cool. Well, let it break and we can maybe enter some calls breaking of 230 and we'll get some momentum to the upside. That's not necessarily the look that I'm seeing right now. Does that explanation help, Dr. Riley? The analysis from monthly, weekly, down to the daily, where you would ideally enter a call option closer to support. Support would be right now on AMD closer into that 215 zone. Now, the key thing is, as people are getting more comfortable with options or trying to learn them, is I've talked about this and co-sign for anyone that's inside of Leverage University already, or if you're experiencing this and you understand these zones, it's not always one line. So if I say support is at 215, right, and you just blindly enter a call at 215, we react at these zones. So when I'm trading live or I'm in live trading, what I want to see is something like this. Pull back. If I'm looking for a call option, pull back into there. And I want to see a reaction that's positive. So it would look something like this. It'll be moving, bam. And it would start, bouncing off of there. Maybe that candle would start flipping and coming back up, and then it flips back to the upside like that. And then you get a candle maybe that looks like this. All right, that's pretty ugly, but you get the drift. Does that make sense? So the candle would flip and look something like that. Then I can confirm that buyers stepped in. Now I can take it back up. So you react in the support zones. You just don't enter blindly. Okay. So another kind of beginner mistake that I see, and just wanted everyone to know. And if you're not a beginner, just understand that you've been there before, right? Because what you'll see sometimes is people will just, man, it's in support. Dr. B said enter calls at 215. It just blasts right through it. And they're like, what's happening? What's happening? You got to have a stop loss. Like you can't just enter blindly, because what happened on SPY, right? SPY support, or excuse me, let me look at Tesla, right? Tesla was a perfect example of that. Dang, I can't even get the right thing. Right here. This was technically support, right? This 458, 460 was technically supposed to be support. But if you enter blindly calls in support and the market's still weak, bam, right there. And you're still in calls. Does that help everybody? Not just Dr. Riley, but does that help everybody that's still learning? If you are, okay, perfect. Perfect. What just happened to my camera? Awesome. Well, on that note, cool. All right, everybody. Well, that was a proper outro there for my camera for whatever reason. We will get this thing figured out, but I promise I test it out before we go. So until next time, peace, love, and blessings to you all. I appreciate you for being here. And also just, the support on the channel has been absolutely amazing. And yeah, we're going to continue growing in 2026. So if I can help you out or support you any type of way, if you need to message us, please join that newsletter down below. Message us inside of WAP. Or if you have any questions about this that we didn't cover, and if you have any questions about Leverage University in general. But overall, if these help you for free, that is awesome as well. Thank you all so much. I will talk to you this week throughout the continuous videos, and I will see some of you in live trading first thing in the morning. All right. Peace, love, and blessings. Till next time. Bye-bye.